strikes back, Trump's tariffs, and the global economic fallout. Welcome to the Pulse of Power, the podcast where we unpack the biggest economic stories shaking the world. I'm your host, Reggie, and today we're diving into a trade war that's sending shockwaves across the globe. It's April 10th, 2025, and the U.S. China trade conflict has reached a boiling point. President Donald Trump's sweeping tariffs have sparked a fierce response from Beijing, and the fallout is hitting markets, businesses, and consumers worldwide. How is China fighting back, and what does this mean for the global economy? Let's break it down. Let's set the stage. This trade war kicked off in earnest earlier this year. On February 4th, Trump slapped a 10% tariff on all Chinese imports, citing issues like fentanyl trafficking and trade imbalances. By March 5th, he doubled it to 20%. Then, on April 2nd, he announced his so-called Liberation Day tariffs, a 10% baseline on all global imports, with an additional 34% on China, bringing the total to 54%. Beijing didn't flinch. On April 4th, China retaliated with a 34% tariff on all U.S. goods, targeting agriculture and energy sectors. Trump upped the ante again on April 8th, threatening a 50% hike unless China backed down by April 9th. They didn't. So, on April 9th, the U.S. tariff on Chinese goods jumped to 104%. Hours later, China fired back, raising its tariffs on U.S. goods to 84%. And just yesterday, Trump pushed it even further to 145%. This tit-for-tat escalation is unprecedented, and it's not just about tariffs anymore. It's a full-blown economic showdown. So, how is China responding? First, they're not backing down. Beijing's rhetoric has been fiery, calling Trump's tariffs bullying and a violation of international trade rules. China's Commerce Ministry has warned that these levies endanger global economic development and hurt the U.S. more than China. They've mirrored Trump's moves with their own tariffs, but they've also gone further. On April 4th, China imposed export controls on rare earths, key materials for tech and defense industries, hitting the U.S. where it hurts. They've also blacklisted 30 U.S. organizations, mostly in defense, adding to a growing list of sanctioned firms. Beyond retaliation, China's playing a long game. Beijing is positioning itself as a champion of global trade, hosting U.S. companies like Tesla and GE Healthcare to pitch itself as a safe and promising investment hub. They're also boosting domestic consumption with stimulus measures. Think lower interest rates, more local government borrowing, and support for export workers. Some analysts on X have noted China's state media promising extraordinary efforts to counter the tariffs, like aggressive monetary and fiscal support. But here's the question. Is this defiance sustainable, or is China just saving face? Let's zoom in on China. Their economy was already on shaky ground, dealing with a property crisis, high debt, and deflation. Trump's tariffs are a gut punch to their export-driven growth. Citi recently cut its 2025 GDP forecast for China to 4.2% from 4.7%, well below Beijing's 5% target. UBS is even gloomier, predicting growth could drop to 4% unless China ramps up public spending. The Chinese yuan has taken a beating too, hitting a 19-month low against the dollar this week. But China's not just sitting there. They've been rerouting exports through countries like Vietnam and Thailand to dodge U.S. tariffs, a tactic that's worked in the past. Now, with Trump targeting those countries too, that loophole's closing. Beijing might let the yuan depreciate further to make exports cheaper, but that risks capital flight and inflation. Some economists, like those at Al Jazeera, suggest China will pivot to the global south, offering loans and debt relief to boost trade. Still, Xi Jinping's in a tough spot. He can't afford to look weak, but a prolonged trade war could spark domestic unrest, especially if factories close and jobs vanish. Now, let's talk about the global fallout. This trade war isn't just a U.S. China problem, it's a global one. Since Trump's April 2nd announcement, markets have been in chaos. The S&P 500 lost nearly $6 trillion in value over 4 days, its worst stretch since the 1950s. The Nasdaq hit bear market territory, down over 20% from its December high. Japan's Nikkei dropped 4%, Taiwan's index fell 5.8%, and the UK's FTSE 100 had its worst week since 2020, closing 7% lower. Oil prices are tanking too. Brent crude hit $57 a barrel, the lowest since 2021, as fears of a global slowdown crush demand. Bitcoin, which some thought would thrive under Trump, has crashed 30% since his inauguration, from $109,000 to $77,000. The U.S. dollar weakened against the yen and euro, while emerging market currencies like the Mexican peso and South African rand are getting hammered. JP Morgan now sees a 60% chance of a global recession by year-end, up from 40%. The IMF's Kristalina Georgieva warned that these tariffs represent a significant risk to the global outlook at a time of already sluggish growth. It's not just numbers. Businesses are reeling. Auto giants like Volkswagen are pausing shipments, and small U.S. firms reliant on Chinese goods are facing price hikes they can't absorb. Who's winning and losing here? On the surface, Trump's betting that tariffs will force companies to bring manufacturing back to the U.S., creating jobs. But economists are skeptical. The Tax Foundation estimates these tariffs will cost U.S. households $1,900 on average in 2025, basically a tax hike. Prices for smartphones, computers, and toys, where China dominates, are set to soar. U.S. farmers are getting crushed too, with China targeting agricultural exports like soybeans and grains. On the flip side, some countries might benefit. Nations in the global south could see a trade boost if China pivots to them. And countries like India, where companies like Apple are already shifting production, might gain from supply chain diversification. But let's be real, these tariffs are alienating allies. Japan, South Korea, and the EU, all hit with hefty levies, are furious. Canada and Mexico, despite some exemptions, are still facing 25% tariffs on autos and steel. This isn't just economics, it's geopolitics. China's framing itself as a stable alternative to the U.S., which could shift global alliances long term. So, where do we go from here? Trump's tariff pause on most countries except China yesterday gave markets a brief rally, with the S&P 500 jumping 9.5%. But the China trade war is escalating, and that 145% tariff is a declaration of economic war. Beijing's not budging, and Xi Jinping's lack of electoral pressure means he can play the long game. Unlike Trump, who might face backlash if inflation spikes and a recession hits before the 2026 midterms. The EU and Canada are already retaliating with their own tariffs, and more countries might follow. The Bank of England warned of further sharp corrections in markets, and the Fed's Jerome Powell said they're waiting for clarity before adjusting rates. This uncertainty could drag on for months, maybe years. One thing's clear: the global economic order is being reshaped, and we're all along for the ride. That's all for today's episode of the Pulse of Power podcast. Thanks for joining me as we unpack this escalating trade war and its global impact. What do you think? Can Trump win this economic showdown? Or is China's defiance a sign the U.S. is overplaying its hand? Let me know on X or wherever you listen. If you enjoyed this, subscribe and share. We'll be back next week to dive into how businesses are adapting to this new reality. I'm Reggie signing off.